Greetings from the Charter School Office. I'm Albert Bertram, the Finance Specialist for the office. So this sheet is a audit review sheet. It takes the 50 to 60 page audit and tries to summarize it in 4 pages or so. It also is easier to compare from year to year than having to flip through all the pages of the audit to try to compare things. So we use this in our office as a form of communication between myself and others in the office, and we utilize it for the renewal process whenever that process begins for each individual school. So it's important to make sure that the information on here is accurate. So if there's anything that you feel should be added, omitted, or changed or whatever, feel free to discuss that with us. So as we move into the sheet, we'll notice the statement of net position. On the audit, this is the statement of net position right here. These numbers are derived directly from this. You'll see the 14,024, 395 for total assets. If we go back to our sheet, we'll see that right there. Now, if you recall, the other one was 395, and this one's 396. That's just a little rounding error. Nothing to worry about. So don't get all upset about that. So that's that. As we move down here, we'll see the ending net position. This is for the current year. This is the previous year. The previous year was slightly higher, so the net position did decline from 2013 to 2014. As we move on into the audit, we'll see these are the balance sheet sections. Going back to the audit, the balance sheet is 2 pages past the statement of net position, so 1, 2. We'll see the balance sheet right here. We're tracking the general fund on the sheet, so here's our general fund amounts. Here's what they're categorized as. Down here we have our fund classifications and balances. So that's the other part that we're looking at right now. So if we go back to our sheet, we'll see here's the current assets and what they're classified as, and then here's the fund balances and what they're classified as in the general fund again for both of these. So we have a non-spendable amount of $20,032. Non-spendable amounts are amounts that cannot be spent because they're either not spendable form or legally or contractually required to remain intact. So usually these are associated with prepaid expenditures, which they match up exactly to what the prepaid expenditures are. Restricted amounts are amounts constrained to specific purposes by their providers, such as grantors, bondholders, or higher levels of government through constitutional provisions or by enabling legislation. So this restricted amount usually associated with debt covenants or something like that. So that's what that is. You don't have any committed or assigned funds, but if you're looking for these definitions, they are directly in the audit. I create this hover over just to help myself and others have quick access to it. So unassigned is amounts that are available for any purpose. These amounts are reported only in the general fund. So moving down, before I move down, I'll move back up to this corner. We have our general fund revenues and expenditures comparison. This is a quick summary of the beginning fund balance, the revenues, expenditures, other financing sources, the net change, and the ending fund balance. We'll show later why this is why the net change was so low for those who don't know. These calculations are pretty simple. General fund divided by revenue, which takes the ending general fund, divides it by the total revenue. General fund minus restricted takes the ending general fund less the restricted amount down here, and then divides by revenues. General fund divided by expenditures, again, just takes the ending general fund, divides it by the expenditures. And then ending general fund divided by beginning general fund takes the ending, divides it by the beginning. And since it's below 100%, that means there was a decline in general fund. If it was above 100%, then we would have an increase in general fund. So moving down, this section of these 4 areas is a summary of what the detailed written portion of page 4 is. So notes payable is usually associated with the state aid note or other short-term borrowing. Long-term debt is usually associated with debt, like a bond, a revenue bond, or something like that, which is it's a bond for universal learning. So there's no capital lease. Management fees are directly from the audit. The percentage of state aid takes the total state aid revenues and puts it as a percentage of the management fees as a percentage of total state aid. And then earned takes the total management earned fees earned, and divides it by the fall 2013 fall count. So that's what that is. Revenues per square footage takes this 68,000 square foot, takes the revenues, divides it by that, expenses divides it by that, and then the difference between the two. And then payment per square foot takes the principal and interest payments associated with the long-term debt or bond in this case, and divides it by the total square footage. So that's where that number comes from. Operations and maintenance per square foot takes the operations and maintenance number down here, and then divides it by the square footage. That's where that number comes from. And then square footage divided by fall count just takes the square footage, divides it by that 2013 fall count again. So moving down into the percent comparison, these are the actual amounts, kind of a more detailed version of that little box up in the upper right hand corner of page 1. This will break down the revenues, and for this June 30th 2014, June 30th 2013, and then the difference. And most of the other schools break their instruction expenditures down into these categories. Most of them do at least these two. Universal Learning didn't do that, so the totals are just here. So that's the total instruction. Going down, we have the pupil instructional staff. So these are again 2014, 2013, and you can see the difference. If you're wondering what some of these numbers are here, I get questions about that. These are accounting code classifications. If you go to I put the accounting manual into Microsoft Word. If you go into Word, push find, you can search for whatever you're looking for. If, for example, if you're looking for basic programs, you type it in, click on the results, then you can move through all this, and it will show you examples of how the accounting works, and then also give you a description of what should be classified as that. So that's just an example. Going back to the audit sheet, we'll move down. So this should be the ending general fund balance, should be the same for this. And then this is the last year's activity again. So we have the original budget, final budget, actual. This little comment here is just here to note that the original budget is actually due July 1, which is well before the fall count, well before a lot of information is available at the school level, so that's why there is sometimes a vast difference between these two. And then the actual and the final, this is the budget, the difference between those, and then this is the percent change between those. So moving down further, instruction as percent of revenues, this takes that instruction number from the large breakdown up above that we just went over, and then divides it by the total revenues, so and puts it in a percentage. So these are 2012, 2013, 2014, that just shows the trend. Universal Learning was 39 and then slightly went down to 37. This little calculation takes the revenues and divides it by the fall count of 2013, the expenditures divided by fall count, and then takes the difference. So that's just another comparison. Moving down into the enrollment, here's that fall 2013 count that was used so frequently above. These numbers are derived from CEPI. This bottom one is actually the unaudited DS4061 that I received through Epicenter from the school, so if that number doesn't look completely accurate, that would be why. I haven't updated the numbers with the audited numbers yet. So over here we have the percent change, which between the two corresponding fall and spring counts. So that's what this is. Below that we have a graphical portrayal of the numeric table for those who like graphical displays. Going down more, we have the free and reduced lunch count. These are from CEPI as well. And over here we have a table of the percent of free and reduced lunch with the corresponding fall count. So, and again, we have graphical display for those who appreciate those graphical displays. Now moving down to this section, this is the informational piece that was summarized on page 1. So this is the debt section, the management company section. I put the page numbers in here, so whomever, if anyone wants to look at this or wants to quickly know how to get to the area of the audit where the stuff's derived from, makes it a lot easier. There was no audit findings, which was good. And then down here, I wrote that the audit is going to change to October 15th next year from November 15th. And then calculation, this just explains that payment per square foot calculation I explained on page 1, so that is just written in there. And then it's reviewed, and then my contact information is right here, albertb@bmcc.edu. I hope this helped. I hope you got some value from it. Let us know if you have any questions, and thanks for all you do for the kids in Michigan. Take care and stay warm.